Welcome back, everyone. We're diving into the market outlook this morning, January 14th, 2026, and it looks like the party's winding down a touch. Katie, based on reports from CNBC, Investing.com, Stock Market Watch, and Bloomberg, what's the vibe?
Theodore, it's less party winding down and more the market remembered it had homework due. Major U.S. index futures are pointing to a slightly lower open. S&P 500 futures are down about 0.4%, the Dow's gupped about 0.4%, and the Nasdaq's leading the charge down roughly 0.7%. It's like we hit recent records and then collectively decided, nope, too much fun, time for a timeout.
A timeout from record highs. Sounds very disciplined. So, what's making everyone put their party hats away? Is it the usual economic suspects?
Absolutely. We're bracing for the December Producer Price Index, or PPI, which is expected to take up 0.3% month over month. After last week's CPI, if this PPI comes in hot, the Fed's going to reinforce their "we're cautious on rate cut" stance faster than you can say inflationary pressure. And to add a little flavor, the University of Michigan Consumer Sentiment preliminary reading for January is also due out today.
Ah, the old Fed caution dance. Always a crowd pleaser. Plus, we get a look at how consumers are feeling. And then there's the bank sector, which seems to be having a bit of a wobble. JP Morgan beat earnings, but their shares dropped. What's that about?
It's the classic good news, still bad news scenario. JP Morgan's Q4 beat estimates but softer investment banking fees and a very specific proposal from the Trump administration for a 10% credit card rate cap sent bank stocks tumbling. Imagine beating expectations only to have a single policy idea send your stocks spiraling. The irony is delicious.
A 10% credit card rate cap. That's certainly one way to get the attention of the financial sector. It sounds like President Trump's policy volatility is a key driver here, creating choppiness across the board.
Choppiness is putting it mildly. We've got credit card caps, calls for defense budget hikes to $1.5 trillion by 2027, and threats involving Venezuela's oil that impact companies like Exxon. But my favorite is the DOJ probe over Fed Chair Powell over independence. Trump's calling him incompetent, which, really inspires confidence in our monetary policy.
Oh, the never-ending drama. It's like a financial reality show with unlimited seasons. So with all this policy noise, plus Treasury yields drifting higher, the 10-year is nudging 4.2%, and oil prices up slightly, it sounds like global risk appetite is taking a back seat.
Precisely. Even tech and chip stocks, which were providing some support earlier in the week, are facing a pullback today. It's a broad-based, let's just wait and see moment.
Speaking of waiting, the PPI data is imminent, and the market's practically holding its breath. The CME FedWatch tool still shows a near certainty, about 97% chance of no January cut. Not exactly surprising, but it hammers home the Fed's current cautious stance.
It's almost adorable how much they're not cutting rates. And that JP Morgan story really highlights the immediate impact of political rhetoric. One comment about a rate cap, and suddenly the entire bank sector is looking glum in pre-market. Though Palantir did get its price target raised to $235 by Citi, named a top 2026 pick. So not all bad news everywhere.
Palantir, always the contrarian. So what's the overall sentiment this morning? Are we heading for a full-blown panic or just a little market sulk?
Definitely more the sulk. The VIX is around 15, which is elevated from recent lows, but it's not panic mode. It's a neutral to bearish tilt. Institutional caution is dominating, especially with all the policy noise and economic data on deck. We started 2026 with so much optimism, setting records, and now we're just consolidating. It's like the market ate too much holiday candy and now needs a nap.
A well-deserved nap, perhaps. So, for our watch list today, beyond the general market malaise, what sectors or specific stocks are you keeping an eye on?
Definitely banks like JP Morgan and Citigroup, given their earnings and the credit card cap fallout. Tech and AI names, obviously, Palantir, anything NVIDIA related to see if they can shake off the broader Nasdaq weakness. Defense stocks could get a lift from Trump's budget rhetoric, while energy like ExxonMobil is on watch due to Venezuela threats. And of course, inflation-sensitive sectors will react directly to that PPI data.
It sounds like a busy day ahead with plenty of twists and turns. Thanks, Katie, for breaking down the market's mood swings this morning. That's our look at the pre-market action, drawing insights from multiple financial sources. Remember, futures can shift fast, so always check live quotes.